Happy holidays to both of you.
Happy holidays to you. Not so much for your stock, though. Big move down. A lot of disappointments around the guidance and just what you're seeing in terms of the consumer environment going forward into next year.
Yeah, it's a brutal day in the market, and it's certainly, we've had better days as well. But the reality is we had a great year, 15% growth in operational performance, and even adjusted for a drag for fuel and currency. We grew north of 10% in earnings. Our forecast actually is not softness in consumers. We actually forecasted earnings growth on top of the record that we achieved this year. We also guided to additional return on investment capital growth. We achieved double-digit returns on invested capital this year. So we see a lot of strength. We're well ahead on bookings despite the capacity increases we have. We actually have less to book now than we did same time last year. So actually the market is strong. There was disappointment, I guess. The market over-focuses, we feel, a little bit on one lever, which is yield. And they were disappointed in our yield guidance. But the reality is our focus is growing earnings. We're going to grow earnings over time, over the next 5 years. We have clear plans to grow double-digit earnings growth and to continue to grow return on invested capital.
I know that analysts asked a lot about this on the conference call as well, but the whole expectation was more capacity, which you just mentioned, more ships out there should translate into higher growth, and they didn't necessarily get that message from your numbers and for your forecast.
Well, it is higher growth in earnings and in return on invested capital. Their concern was higher growth, I guess, in yields. And we have 9 brands. Those brands run the gamut from mass contemporary brands like Carnival to ultra-luxury brands like Seabourn. And depending on where the capacity is coming at a given point in time in the year, and certainly in this time of bookings, you can actually have an increase in yield and in capacity in a brand that is below the fleet average, which can hold you down a bit in terms of overall average yield for the corporation. Our focus is to grow earnings at a rapid rate, and to continue to grow return on invested capital. We get that partially through yields, but we also get it through capacity, and there is a shift with more capacity coming in.
Arnold, you mentioned that bookings look good, like they're holding up right now. How rapidly can that change? And I ask because your stock is trading at basically the lowest valuation on expected earnings in almost a decade, so the market seems to be expressing some concern about longer-term demand.
I think the market is expressing concern overall, as you can see from the overall market, and we're obviously, party to that and a part of it. For us, we don't see any fall off in demand. In fact, as I mentioned, we have less to book, even with the higher capacity, than we had same time last year. Moreover, when you look at our business, we are totally underpenetrated in every key market in the world. We're also kind of, as an industry, and in our brands in particular, are somewhat recession friendly because we're at a deep discount to equivalent land-based vacations. And so we're kind of a go-to from a value and definitely a go-to from a great experience.
Are you seeing more consumers shift toward the value vacations at this point?
No, we aren't seeing major shifts. The demand we're creating, we believe we're creating just from great guest experiences and making cruise more aware to the general public and debunking the myths about cruise, whether it's here in the U.S. or whether it's in Europe, any of our source markets, even in China, where they don't have any myths about cruise, they're just unfamiliar with it. So we're seeing growth, everywhere. In Europe, which grew some consternation today on the call, the reality is we have a double-digit capacity increase, and those brands are ahead on bookings, and they're going to grow earnings this year.